All right, everybody, welcome. Doug McKay, anti-wallstreetguy.com on the 18th of February. If we have time towards the end of the little video here, we'll look at the indices. But we know that the equity markets are long. Bonds in terms of things tied to treasuries are down. We will look at high-yield bonds today, though. And then we'll talk about silver and gold. Okay, so let's take a look at some of the emails that are coming in. Some of these I'll talk about on the show tomorrow. This was actually a post that I put out a couple weeks ago. This was Verizon VZ. We said we liked it with a close above 36.50. And what I want to do here is just show you why. Kind of a symmetrical triangle. Triangles or pennants, if you will, break out they follow the overall previous trend. So the previous trend here was up, especially if we get a close above this level here, which is what we did not only on this day, but also on this day. Now, if we were to close below the 35.50 level, that's where our new stop would be on Verizon. All right, let's take a look at shorting the dollar. And again, a chart is a chart is a chart. Forget about what you think should happen or will happen or what events around the world might or might not cause things to happen. We always want to make our final decisions on a chart, not persuade ourselves with the news. But anyway, taking a look at UDN, which is bearish, the buck. Again, if we broke the 50-day moving average at 27, I would be out. I do like the fact that we got above this level here. If you're not in this and you wanted to short the dollar, I would probably wait till it got a close above the high in this candle of 27.60. But overall, it looks good. As you know, in terms of percentages, this is pretty tight here. It certainly looks very good above 27.75. Let's take a look at this on a weekly basis. And this is the kind of chart we want to see. Where we're coming out of a base. This is almost a cup and handle, right? On a weekly basis. Here's the cup here. Here's the handle. Again, we get above this level. It looks highly probable. And if you're in it right now, I would stay in it. Okay? So that's short the buck. Let's take a look at GLD, gold ETF. This is looking at it on a weekly basis where the candles represent weeks. Again, the same thing we've been talking about the last several weeks. We have this triple top or even a head and shoulders. Top, 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 or you could say left shoulder, head, right shoulder. We never broke the neckline on a close on a weekly chart. Now, let's put this up on a daily chart and see what it looks like. All right, here we go. We're above the 50-day moving average. For me, we talked about staying out of this till we got above 139. If we got above this candle here on 12/14, and that high was 137.21, I might get interested prior to 139. We can also look at the gold miners junior, GDXJ. GDXJ. I drew this in yesterday, but I did not post this. This is a trend line down. We broke above that. That's a good sign. We also got above this area of resistance. I drew that line in. We also got above the 50-day. This would obviously, for me, be a speculative trade, but less speculative than GLD because we're not looking at a triple top here. If you were to get into this, I would exit it if it broke 4 ticks below the 210 candle. That low was 35.86. If you wanted to play it a little bit tighter, if it broke this area here of 36.95. Okay, let's take a look at some of these other ones. Boeing we put up on the blog on 215. We were looking for a close above 72.82. We got that Friday today on the 18th, 73.04. All right, so I do like the looks of Boeing. If it broke this area here, I would be out. You could even play it a little bit tighter. I would not bring it all the way back to the 50-day moving average here. Let's take a look at Intel. I believe this was also on the blog yesterday. Again, we were waiting for a close above this area, which increases the odds. We were looking for a close above 2190. We closed today at 2214 on the 18th, and yesterday we closed at 2197. All right, this post went out yesterday on the 17th. Let's take a look at Oracle. And this is, we put a stop in here. We have a new stop. You know, we've been tracking this for a while. We keep moving that floor up. But this was a nice close today. We're going to keep the same stop. But the fact that we got above the high of 33.59, which was put in on 211, we also got above the high of 33.54, which was put in on 214, was a good sign. So we may be moving up further on Oracle. Maybe. You know, you're only going to move up so many times out of these bases, and then it's over. Then we're going to start heading down. But we did have an increase in volume today. If we do start to head down and it's a false breakout, that's why we have our stop in place. Let's take a look at Apple. We drew this trend line in a while ago. I put this post out yesterday. If you were looking at the still charts on the blog on 217, if we broke 353 on a close, I would either take some money off the table in Apple or all the money off the table in Apple. Do I think we'll get a bounce here where it broke out previously? Yes, that could happen Tuesday, Wednesday. But we do have some overhead resistance here. If it stopped falling, where would you get back in or add? Maybe above 361 on a close. We'll monitor that next week. Let's take a look at silver. This was a still chart. Again, this overall chart is behaving better than GLD because we're above the highs. We did buy this in the managed accounts. We'll see if it worked. I think it was up again today, right around 2%. All right, so silver seems to be working. I think it's extended here, but it could continue to be extended. In other words, would I chase new money here? You could. I would put on a half a position if you do want to chase it. Anytime something breaks out more than 5% from its most recent breakout area, which SLV has, you may want to let it go or trim your new position down. All right, let's take a look at Duke Energy. This was an email here. This chart is an interesting chart. Remember, right now we're really not looking to chase anything. That doesn't mean that something extended won't become more extended. But what we want to do for our purposes is look for things coming out of basis. This did close today above the 50-day moving average, although today's candle, meaning Friday the 18th, was at the lower end of the range. If you're looking to get into this, I would wait till we got a close above 18 and a quarter, above this area here, 18 and a quarter. If you're in it, I would have my stop no lower than 4 ticks below the 215 low, which was 17.59, so that puts you in around 17.55. Let's also take a look at SLV. We looked at that. Let's take a look at PG. This was an email here. Procter & Gamble. Now, often gaps of space on a chart will get filled either to the upside or to the downside. This has a lot of overhead resistance going back to here, going back to here. Certainly you can see it up here. If you're in this, if it closed below the low on 217 of 63.45, I would be out. If you're looking at this for a new trade where it may potentially fill this gap, then I would wait till we got a close above 65. All right, and I would still have my stop maybe 3-4 ticks below this low on 217. All right, what else? In the managed accounts, we do have the SPY. Obviously, the overall trend is long there. We do also have the VTI, Vanguard Total Market Index. As I mentioned, we do have silver. We do have BRKB, which we put on last week. We were waiting for a close above here. Let's take a look at this on a weekly chart. This is the Class B shares, Berkshire. I'm going to tighten up the stop a little bit. The markets are closed Monday, so I'm going to be going into the accounts and actually putting in some hard stops. All right. For the most part, I like to use mental stops, though, in case something comes down intraday. during the day, intraday, and then goes higher. Let's take a look at, here's a position we may put on next week. Been looking at this for a while. This is the high yield bond ETF J and K. This is looking at it on a weekly basis. I do like the fact that we got above this level here. We can say that we closed above this candle on a weekly basis. We got above this candle. We got above the high in this candle, which was 40.52. We closed today, Friday the 18th, at 40.72. Let's take a look at this on a daily basis. So there you go. We broke out. We first started to break out here, which looked good, right here. And then we started to come down, but we held this area of support. We also held the 50-day. But I do like this. Again, I'm a little hesitant based on the volume, but this would be a pretty tight trade in terms of percentage back. It'd be very similar to shorting the dollar. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. See if you can tune into the show live tomorrow, 1 o'clock on 760. If not, we'll see you on the blog. Thanks for listening. Thanks for joining the show. And have a nice 3-day weekend. We'll see you next week. Thanks.